The Fed has stated that it expects to raise rates twice more, but hasn't actually done so. This could be a threat to inflation or another method of controlling the market, because if people anticipate more rate hikes, that will lower consumer confidence and spending, which will eventually lead to disinflation or deflation, because there would be too many of them. As we've been saying recently, Tesla stock is running and looks to hit 300 unless there were any macro issues or black swan events that get in the way and stop the momentum. When there is an excess of supply of goods and insufficient demand to drive up prices, meat prices decline. When interest rates are high, most consumers have less money to spend on goods. If you purchase anything with debt, such as a car or other item on finance, you also incur higher costs because of the opportunity cost of keeping your money in the bank and earning higher interest instead of using it to buy goods. The possibility of a soft landing is increased if the Fed can threaten rate hikes and achieve the same result without really raising rates, or at least not as much as they were claiming. Arriving at land, the market is giving Tesla more credit for their longer-term opportunities, primarily FSD, and it seems that this is the reason why Tesla seems to have reacted more than most stocks to this news. However, it feels like a bit of an overreaction now that some stock analysts have weighed in. These analysts, in my opinion, are not as credible as many investors in the community, considering how many stocks these analysts have to follow and how much time and effort many of us put into Tesla and Elon. Recently, Goldman Sachs downgraded Tesla from a buy to neutral after Barclays and Morgan Stanley did the same, which seems a bit contradictory around 280 at one stage, and this was not in a bubble. This is how much investors value the potential of Tesla, realizing that they are the leaders in their field. Tesla already offering EVs at very competitive prices compared to the equivalent ICE vehicles and definitely winning on cost of vehicles compared to the competition. This lead has become more apparent lately with the transparency from Ford, along with Ford and others wanting to join the Tesla charging network. If Tesla already able to offer so much value at these price points, then when the technology improves further, with tens of billions of dollars more spent in the industry, if not more over the whole decade, then the cost of batteries should only come down if the competitors are going to have any chance, leaving Tesla even more profitable. The competition may have to resort to more help from Tesla in order to achieve what they're doing, possibly with the drivetrain and obviously FSD. As for Tesla's drivetrain, though we're really hoping they've done something special with the new long-range Model 3, and hoping that it is not a nickel-based cell, yet still able to get that much range, a new record for efficiency. I keep saying that since Tesla hasn't set a particularly high bar for themselves over the next year or so, if the stock price can reach 300 or even higher later this year, it will demonstrate the value that investors and the market place on the business and the potential of the company's future products. These investors also seem to be very patient and willing to wait because in the meantime, Tesla is working to get all the hardware out as quickly as possible so that it can accept these updates and become self-driving cars and possibly rubber taxes. In the next few years, all that needs to happen is a solution for FSD, which will then be included in every Tesla, simply as a software update. Depending on when it occurs, there could be about 10 million FSD-capable Teslas, just like that, because the upside greatly exceeds the downside, and no one wants to miss out or sell ahead of time. These numbers grow to such an extent that it makes sense why Tesla's current stock price is so low. This decreases the stock's liquidity and drives up the market valuation. I don't believe a moment will come when Tesla gives up and declares that FSD is not feasible. Instead, I believe that Tesla will only be able to grow closer to finding a solution. Update after update, FSD continues to improve, much like everything else. 4680's Cybertruck bots and Generation 3. When these goals are achieved, or even just one or two of them, the stock price will rise to new heights. For example, if Gen 3 can produce EVs at half the cost, if 4680s can reduce cell cost by 30 to 40%, or if bots can replace any human labor, these would all have such a significant interventional impact on finances that the stock should continue rising. Tesla doesn't have to get these goals right away. It just needs to show progress at a rate that allows people to plug in numbers and see how good they look growing over time. And as I've said, investors are patient and can wait years and years for some of these to happen because they are so valuable. Of course, the stock won't increase linearly, and there are a number of events that could cause it to decline in the interim, such as the FED that we mentioned earlier and the current period of high interest rates that have kept the stock down significantly. Once they are relieved, however, the stock can rise again as it is currently being suppressed. We just hope it won't be too harsh. landing when we finally get there. We also have various events occurring in Russia and Ukraine, which also should hopefully come to an end. But as we've just seen, anything can happen there too. But there is always something that happens every year, yet people are still buying cars. And Tesla is still making them. Then Elon, of course, can do various activities like sell tests, are stuck on the open market and sink the stock price, or become more political and put some consumers off the brand. However, Elon is far more likely to add value to Tesla over the long term and discover more opportunities for the company and products. And he won't give up. My concern was that the market no longer valued Tesla like it did in the past due to issues with Texas. Berlin and 4680 is not ramping to where we were told to expect. My biggest lesson is the market, or especially tester investors, are very forward-looking and patient. And now we've seen that they're willing to put almost a 300 price on the stock even during these times being very little to expect or going on. We aren't seeing or hearing about any major increases from Texas or Berlin. And the 4680 production in Texas is nothing close to shifting the dial. But the stock doesn't care because that's not the investment. Rather, it's a bet on what Tesla will become and do in the next 5 to 10 years, given that the numbers are enormous. And it's a long time for Tesla to accomplish so much by then, and the analysts are correct. The ramp for the Cybertruck, which we have already been warned will be slow, so any progress there will be good news in the Q4 earnings call. We were also told that 4680 sales will finally ramp next year too, but I really don't think the stock price is holding its breath on that one either. And despite government incentives like tax breaks for other technology, it will be interesting to see how they overcome these issues. For instance, a Tesla automobile is still frequently too expensive. A Model S starts at roughly $80,000 before reviews or other discounts. The third configuration, the entry-level choice model from Tesla, which still costs little more than $40,000 before incentives, is still out of reach for the majority of drivers. Ascending Tesla just released their Q4 results. Even if there were first reservations about the company's revenue, the financial results surpassed projections and sent stock skyrocketing, with a 52-week low price of 101.81 cents and a 52-week high of 384.29. Texas could get to at least 30 gigahertz run rate by the time the Tesla company's earnings are released in the Q4 earnings report. Nevertheless, Tesla's earnings aren't going to be great, probably not even until sometime in 2025 when Mexico starts ramping seriously. End of 2024. But the Cybertruck is not dependent on those either, because punishment will occur because Panasonic is aiming for a similar run rate for their 4680s as well. Considering all the progress we anticipate at these rates, investors don't seem to be acting hastily, and the stock price has already nearly reached 300. I'm quite optimistic that, at least in the long run, it should continue to operate, especially when there are more concrete factors to support it.